Do you want to know the best way to finance your new home? Well, stay tuned. I've got Derek Jones with Legacy Mortgage. We're going to go into all things mortgage so you know how to make that home purchase a reality. As always, thanks for checking out our newest video here on all things Tyler. We want to remind you to go ahead and subscribe. That way you get all the notifications when we have our newest videos come out. And we want to remind you that we are your friend in real estate. Derek is a great contact for all things mortgage as well with Legacy Mortgage. We'll have all the information in the description. So we're going to get right into it. Derek's got 20 years plus mortgage experience in the East Texas area. So he's local. He knows everything about the market. And I'm going to let him take it from there a little bit.
So a lot of good things are happening in the mortgage world. We've seen about 6-8 months ago, rates were about 8.25. We've now seen them kind of come down into the low to mid sixes. We've even actually locked some people in at 5.99 in the past week on some of our specialized loan programs. So really a great time if you're looking to purchase. I would say if you are a first-time home buyer, Tyler, I know we've talked about this, do not wait. Here's the reality, folks. There are a ton of people sitting on 2% and 3% mortgages right now. They are not going to leave that mortgage for 7%, but they will leave it for 5%. And we are not far from getting into the 5s permanently and probably even to the low 5s, high 4s, which I think that's where we're going to bottom out. Once that happens, all those people that are sitting on 100, 150,000 in equity, they're going to sell their house and they're going to get back into the market. It's going to raise prices again. It's going to create a ton of demand. And if you only have 0 or 5% down, you're going to get pushed out of the market most likely because you just won't compete with 20% down in cash. So that's my biggest advice to anybody that's looking right now or watching this video and subscribing to your channel is get out there, get in the game. Even if we need to look at a credit report now for something 6, 9, 12 months out, now is the time to do it.
For sure. So kind of like we led into, a lot of our viewers are people that are thinking about East Texas. And I think one of the tricky things that people always have questions about is if I'm moving to a new area, what does that loan process look like? Because they've got a new job, possibly new industry. What's the process? How's it different if they're new to the area?
Okay. Great question. So a couple ways you can tackle that. One is, most lenders, really all lenders, if you're moving into a primary residence, they want to see that you have a job coming into that market. Now, if you work remote, totally fine. We just need a remote letter, from your employer saying you're working remote, and a lot of people are doing it that way. If you want to buy in East Texas and your job is say in California or Arizona or someplace outside of the general area, one way you could do it is through a second home. With as little as 10% down, you can use your income in your other state or other area and then buy that property 10% down and then occupy it whenever you get your job in the new area. So there's lots of ways to skin the cat. I would say, better to start earlier than later. Give us a call. We can walk you through all the different options on that.
Awesome. So another big question is, how do they know how much house they can afford? Are there any good tools? What's a starting point? If somebody were to ask you that generally, how would you kind of approach that with them?
Well, I would say definitely talk to a mortgage lender. I've had a number of calls from people, and I'm not going to say who the major online presence is, but they've got these online calculators that are skewing people's expectations of what their mortgage is going to be. They're buying a $300,000 house, and online it shows their mortgage is going to be $2,100, and they're barely putting 5% down. Yeah. It's not reality. So first thing is call a mortgage professional, call someone that you trust that a good realtor like Tyler can refer you to. They will be able to run the numbers if they know what your credit score is, or even if you have a ballpark of your credit score, or if you don't want your credit run, we can do a soft pull. It's really easy, doesn't affect any inquiries on your credit report. We can run the numbers. We can say, okay, if you know that you're gonna get this much from your house, here is what you would qualify for in the Tyler market based on that price range. So we can do the pre-approval really easy. We don't need to pull all three. I can just run like an Experian report and get it done for you fast and easy.
Okay, so the next one, what are some unexpected costs when buying a home?
Well, I think with us, there's really nothing should be unexpected, and that's another bit of advice I would give to people. We're seeing a lot of lenders right now that are throwing unexpected points and fees out on estimates, and they think, wow, I had a guy call me today or the other day, hey, this guy's offering me 5.99. And my first question was, okay, go back and ask them how many points they're charging you to get that loan.
Right. Because that's just an extra fee on top of the mortgage.
That's right.
Or on your closing costs, rather, I guess.
That's right. 1% or a point is basically 1% of the loan amount. So if you're financing, say, $300,000, that point is going to cost you $3,000. It's not normal to pay points.
Yeah.
But lenders are enticing people, or they're, I think, duping people into thinking, oh, wow, I can get this great rate. The problem with the point is, folks, it's going to take you close to 5 years to break even on that point. So you're going to save, let's say, on a $300,000 house, you're going to save about $50 a month from going from, say, 6.5 to 6.25 by paying 1 point. It's not a 1% drop in your interest rate. It's only roughly about 0.25%. That's going to take you 59 to 60 months to break even on that. So to me, that's the only unexpected thing that comes up a lot, and people don't realize it until they're into the process. They get sold on this great rate, and they don't realize there's extra closing costs that are factored in there. Other than that, I guess it just would be normal expenses. But on the mortgage side, that's something that I think is really egregious right now. And I would say to get it in writing, you have to get a loan estimate in writing. They can give that to you. They can spit it out in 5 or 10 minutes. It's a red flag if they're not going to be able to spit that out quickly. If they take 2 or 3 days to get you a loan estimate, there's a reason why they're delaying. They don't want to be shopped.
And I will say that just working with a lot of people who go through online approvals and things like that, they will send you very promising figures and whatnot, and it just doesn't always tell the whole story. So we always try to connect with Derek and Legacy, because so let's just real quick on that. What's the cost of a refinance typically? So if you're paying $3,000 for a point that's going to take you 5 years, what would it cost to refinance it in that window?
So depending on the loan amount, because your title policy, as you know, would weigh into that. I would say most people probably in the $4,000 to $4,500 is what you would look at.
So you're looking at maybe a 50-ish% increase, but that savings is going to be significantly greater than $50 a month when it comes time to refinance, I would guess.
That's right. It would be. And you can roll it in when you refinance. You don't have to come out of pocket with that money like you do on a purchase. So that's the nice thing about refinancing. You can roll the closing costs.
So your money out of pocket in that scenario is a lot less, and you get a better monthly payment.
That's right.
Okay, so we have a lot of people looking, YouTube's kind of a research type channel medium for people looking in this area. Sometimes they're 12, 6, 3 months out. What does that look like in those different phases? Somebody wants to move August of next year. What do they need to do to prepare for buying a home? What's something actionable steps that you think are beneficial for them to?
Yeah, I think if great question, Tyler. I think if someone hasn't had their credit report looked at in 12 to 24 months, I would say let us at least do a soft poll or do a single, because if sometimes small collections will pop up. We've had people have had someone that stole their identity, and they ran up $800 on a Target card and then just totally didn't pay it, and now they got this collection they didn't even know about. So I would say have somebody look at your credit, even if it's just a single soft poll like we would do like on an Experian report. Let us take a look at that, and then walk you through expectations on, okay, where do you want your monthly payment to be here in East Texas? What are you comfortable with? Okay, if you're comfortable with $3,000 a month and you're going to put, say, $50,000 down, well, then you want to be in probably the $400,000 range or below. Just ballpark, I'm just throwing numbers. So that's what I would do, is I would be looking at expectations, where you want your payment, how much you think you'll net from the house, and then also probably have someone look at your credit if you haven't had it looked at in a while, because there's lots of things we can do. We've got lots of tools that we do for free that will allow them to get their scores higher, that will get them a better interest rate and a lower payment.
So 12 months is a long enough period of time to make steps to improve your credit, which could impact your interest rate and all that.
Yes, unless someone has like a 460 credit score or something where they've just really messed up their credit for, they've got 3 pages of collections. That's the only time I would say you're going to need probably 2 years on that. But for the average layperson, 12 months is plenty of time.
Okay. 6 months, does anything change in that window? Getting a little bit closer? Is that probably the point to get pre-approved, or is that still a little early, you think? What are your thoughts on that?
I think at least having someone look at the credit report. Okay. You don't maybe necessarily have to do a full pre-approval until maybe 90 days out, but everybody's got a different comfort level. The good thing about a pre-approval, Tyler, it's good for 120 days because that's how long a credit report's good for. So if nothing changes in that 4 months, then we just say, hey, let's just re-access a new credit report, and then we can go ahead and update the pre-approval. Easy.
So then at that 3-month point is probably the point. We're getting pre-approved. We want to buy in August. We get it done in May, so then we're ready to go. Yes. We know payments and things like that. It's in the market in a 3-month window. Mortgage market's probably not going to be too significant either direction. So if it's 6.5 and it goes to 6 or 7, you're going to have a ballpark of what your payment's going to be.
That's right. We're usually conservative on our numbers just to give a little bit extra wiggle room for that. So people like that.
Okay. So there's a lot of options, not a lot, but there's a few options for zero down. Somebody's first-time home buyer, limited on down payment money. What options are best, or generally what options are there for zero money down?
So there's lots of good options for zero down. Obviously veteran loans, VA loans are always zero down, so those are great. If you're not a veteran, obviously there's something called a USDA loan, U.S. Department of Agricultural. You don't have to have 14 acres out in Mount Selman or Jacksonville to qualify. Really anything outside the city limits of Tyler will qualify. There are some income restrictions, so you'd want to give us a call so we could walk you through some of those nuances. If you think your income is too high to qualify for those, we have a very good zero down FHA loan that a lot of people that doesn't have any restrictions on them, and a lot of people are taking advantage of that product.
What about down payment assistance? Are those good options? What do you know about them, or what can you tell us about that?
They can be. That zero down FHA is a down payment assistance.
Okay.
My only concern with that one is sometimes the interest rates are a little bit higher, so it pushes the payment up.
So in one way or another, ultimately, you're kind of paying for that down payment. They collect it in interest, I guess.
They do.
Difference.
It's a little bit of interest. We also have a very good 1% down conventional loan for people that fit in a certain income range. That's a really good one. So yeah, really what I'm seeing over I've been doing this about 23 years, the last 2 to 3 years has been a lot greater effort to try and get more homeowners in and still do the full underwriting like they didn't do in 2006 to 2008, which caused a lot of the problems. But now it's a lot better, a lot stronger on the underwriting, so a lot less foreclosures and a lot more people are qualifying.
So I know there's different programs, there's government, conventional, things like that. Why is conventional more preferred, or why is that a better route for most people?
And you know this, a lot of lenders will sell government loans, FHA loans in particular, because they can make almost double the commission on those loans. And that's just not how we work. They're more expensive. There's more fees involved with the FHA. It is a very good loan program for someone with a 580 to 680. But if you've got a 740 and someone's trying to push you into an FHA, that's a red flag. There's a 3% down conventional. It's a great first-time home buyer, or even just a general income-based 3% down or 5%. But FHA has its pros and cons, but conventional is going to be your least expensive loan when it comes to fees, and it's also going to allow you to drop your PMI after you get to that 20% equity, which is huge. FHA, you can't drop it unless you put at least 10% down, and then the government, in its infinite benevolence, allows you to drop it in 11 years. Isn't that awesome?
Yeah, so thoughtful. Okay, so just to wrap it up, I think a lot of people moving to Texas want space, they want land, and would like the customization of building. That's a little bit different process. What does that look like if you wanted to purchase land versus purchase a home? How is that different? Why is it different? What is to be expected?
So, good question. So land typically requires about a 20% down payment. If it's raw land, sometimes it's going to be a little bit more if there's no utilities on it. We don't actually do the land loans, but we partner with a lot of good local banks because we send them business, they send us reciprocal business. So we can basically walk you through, get you pre-approved, and then work with some local banks to help them purchase the land, also get that construction loan, and then when they're pretty much done with the construction, we can come in and do a permanent loan as a refinance, which is kind of huge because then you don't have to put anything down, and get the best interest rates and shop around for them to get the best deal. So that's how we kind of work it. We can be a one-stop shop where we can help them with the land loan, or at least the referral to that, and the construction loan, and then the permanent at the end.
So looking at a $400,000 lot, most banks, or if not all banks, will require 20% down. So we would need 80 grand to start that, and then opening up a construction loan, if there's not enough equity in the build, it would be additional money down. Is that right?
That's correct. It would be a little bit, because typically they're only gonna lend up to 80% of the appraised value. So if you've got the land in there and it factors out, you probably shouldn't have to bring a whole lot more, if at all, to closing. But that first 20% sometimes is a factor for people. Sometimes it's better to come in, as you know, get the house, get to know the area. Okay, where do I want to buy my land? And then after a year or two, go ahead and purchase that land, pay down on it a little bit, then do your construction of your dream home. Sometimes that's a better way to tackle it.
Well, as always, we thank you for checking out our newest video. We want to remind you, if you found this video helpful, leave us a comment, like the video. Again, subscribe to the channel. We'll bring Derek back in on occasion just to kind of update you on the market. But we want to remind you again that we're your friend in real estate, whether it be mortgage, purchasing, all that kind of stuff. We've got all the resources to make the move to East Texas reality. So we'll catch you on the next one.